What's going on? It's Luke with the Common Investor here, bringing you another video. In today's video, I wanted to discuss the Lyft IPO. I know there's a lot of hype around that as of right now. Their financial statements have just come out as well, and they're slated to IPO, I believe, in the next couple of weeks. So a lot of talk about it on the news, and hearing it from a lot of different videos on YouTube. So figure I should do a video on it here today and give you my thoughts and what I think of the Lyft IPO and if I'm going to be buying or not. If you don't know what Lyft is a ride sharing company. So what they do is they're essentially a taxi service, and they work just the same as Uber if you've heard of Uber before. So you can get right on your phone. You request a ride to wherever your destination is, and in the next couple of minutes, a Lyft driver will come drive up to you, and you're on your way. And all you have to pay is the fee that you see beforehand, and you're good to go. So getting right into it, I have pulled up here the S1 filing for Lyft, and any of you guys can find that. You just type in Lyft S1 filing into Google, and that'll pop up there for you. And essentially what that is it's a pretty large document, as you can see, about 220 pages. So a lot of good information in there. Definitely something that you should look into if you're looking to invest in any IPOs. They always bring these out for publicly traded companies. All right, so first thing I wanted to look at here in the Lyft IPO's S1 filing is their financial statement. So I have pulled up the consolidated statement of operations data. So they have from 2016 to 2018 their financial data, and as you can see, revenue has grown significantly from 343 million all the way to 2.1 billion dollars in revenue for 2018. So that's some very good revenue. As we look down and see the cost of revenue, operations, R&D, marketing, we can break down exactly what they're spending their money on and see if they have a profit or a loss, which I'm sure you can see there they have a pretty significant loss, and I'll get into that here in a second. So in 2016, they had a total costs and expenses of just over $1 billion. And in 2018, they're looking at $3.1 billion in total costs and expenses. So that's going to bring a total net loss of $911 million. So almost $1 billion loss there for 2018. And that's pretty significant. I believe I've been hearing if they do go public in the next couple of weeks, it'll be the biggest net loss of an IPO in the history, I believe, is what I've heard. So that is very, very big and something to note if you're planning on investing into this IPO. The next thing I want to get into is actually going to be a pro, and it's going to be showing the growth of their company. So back in Q1 of 2016, they had about 3.5 million active riders, and in Q4 of 2018, they had 18.6 million riders, which is significant growth. They've been growing very significantly over the past only couple of years. So that is a very great thing that they have going for them. Revenue per active rider, Q1 of 2016, as you can see, $15.88. Q4 2018, $36.04. So they're not only upping their riders per ride, they're also upping the revenue per active rider, which is very good. And as you can see from the financial statements before, definitely increasing their revenue year over year very significantly. Here's a very shocking stat. Rides in the millions. So Q1 of 2016, they were looking at 29 million rides, and now they're at 178.4 million in rides, which is a significant growth. Something that you want to see, and something that is a definite pro for Lyft. The last thing on the S1 filing that I want to get into is their risk factors section. So this is the section where they list out all of the risks that they see associated with the company. So first up, we have the first one, which I definitely touched upon. We have a history of net losses, and we may not be able to achieve or maintain profitability in the future. Obviously, it's something that they have to put in there, and I think that's probably their biggest risk, is that they have a lot of outstanding debts, and they currently have a net loss of just over $900 million. So that is definitely something that they need to get under control. They need to get their spending under control if they want to continue to grow this company and have their stock price increase over time. The next one they have is they face intense competition and could lose market share to our competitors. I think this is another main concern. As you know, Uber is a fierce competitor. Uber has the brand in the market, in the ride-sharing market, and that's one thing I wanted to touch on. Uber currently, whenever someone's looking to get a ride, they don't say, "Hey, let's find a taxi" or "Let's find a Lyft." They say, "All right, let's get an Uber." And really, the only time that I have seen now, I mean, I'm a very small market segment of getting a Lyft is if the Uber prices are too high. I'll go and check Lyft. My friends will check Lyft to see if they're cheaper prices. For the most part, we use Uber on the very first time when we're looking to get a ride. So that is something that they definitely need to get under control, and they need to do a lot more marketing to make themselves known in the ride sharing company. Now, I would say that Lyft does have a great brand name out there as the number two. Obviously, Uber is number one, and definitely a fierce competitor. And then I'll just go into one last risk factor that they had mentioned there, and it says ride-sharing market and the market for other offerings such as network shared bikes and scooters are still in relatively early stages. They're not very diversified, so they are using their ride sharing, so you can get a ride from a car just like you can with Uber. However, that's really all that they have. I know they are expanding into bikes and scooters, and that's something that they're still developing. Whereas Uber has Uber Eats, they have the scooters, they have the brand name Uber Ride Sharing. So they're not very diversified as of right now, and something that can definitely stunt their keep them from growing to the potential that they could be. So that's something to consider before investing in the Lyft IPO. So my final thoughts on the Lyft IPO are that I believe they don't have a strong enough brand. They have too big of losses right now, just over $900 million in losses in 2018. And they're not very diversified. I think those three things are things that are going to keep them from growing to their potential. Now, I'm not saying that investing in Lyft is going to be a bad investment, and if you choose to invest in them, great. But these are just a couple of things to consider. So let me know what you thought in the comment section below. Are you going to be investing in the Lyft IPO or not? Would love to get your thesis of what you think Lyft's potential is. Do you see them growing in the next couple of years, and where do you see them in the next decade or so? So with that being said, I'll leave it at that. If you liked the video, feel free to like, comment, and subscribe, and we'll see you in the next video. Thanks, guys.